edition of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you, sir?
I'm doing great, man. How you been?
Oh, can't really complain. First of all, I wanted to thank you for the bargain re-up on the gold report. I've been getting it for quite a while, and for a couple of years there, it was like an insurance policy. I'd say, oh, I got to buy gold, and the gold report would say, oh, no, not yet. And lately, it's like a winning lottery ticket. So it's working really well all around.
I appreciate the feedback, Marty. Thank you.
Now, Tom O'Brien.
Good day, money masters and treasure hunters. Welcome to the July 14th magnificent Monday edition of The Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom this evening. I'm the morning anchor that gets things kicked off here at TFNN each and every day. And I have a newsletter service called Mastering Probability. It's out each morning by 8 a.m. I'll be filling in for Tom this afternoon, and I am grateful for your presence here today. Now, my outcome during the next couple hours is to teach you how to master the tools for trading. That includes the tools of the mind. Because when we master the tools of our mind, we begin to think like a strategist. During the next hour, you'll hear me use tactical tools, things like A to B equals CD patterns. We'll look at swing points. We'll take a look at Fibonacci retracements and expansions, Gartley butterfly patterns, and of course we'll use Japanese candlesticks because they are the signs that the bulls and bears make for you and I each and every trading session. Our call number is 877-927-6648. Give me a call, folks, if you'd like. Happy to take a look at your stock chart. We had the Dow finish off 112 points. Up 112 points. How about that? You thought maybe you turned it into the wrong show. We had the Dow up 111 points, closing out at 17,055. The S&P up 9.5, trading out at 1977. NASDAQ Composite up 25 points. It closed at 44.40. Russell 2000 up $5.60. It closed at 11.65. NDX 100 up 24. New York Stock Exchange up 55 points, but on light market breadth, only 880 net advancing issues. It needed some 2,300, 2,400 in order for the bulls to actually take back control of the marketplace. Of course, gold finishing down. Right now it's off $29, trading out at $13.08. Silver's off 48 cents. It's trading at $20.98. Light sweet crude relatively flat, up 19 pennies at 101.02. All right. So where are we going to start? What are we going to look at here? I think the most important chart, let me go ahead and put that on the screen for you. The most important chart for us to take a look at is the QQQ. We'll take a look at the NQ. We'll take a look at the Qs out here. Now, the reason that I say that is this. Today we had the Qs up on very light volume. It's a Monday. It's a summertime, so you expect volume to be light. But today the Qs did 18.2 million shares. When price was last up here, happened to be July 3rd. July 3rd was a trading session that went from 9:30 in the morning until 1 o'clock in the afternoon. On that trading session, it did nearly 15 million shares on a much lighter, much shortened trading session out here. The reason that I point this out is that the Qs have a volume characteristic unlike any other. And the volume characteristic goes like this. The Qs make highs on light volume. The Qs make lows on heavy volume. Now, if you're watching this on Tiger TV, I hope that you are, what you see is a butterfly pattern as well. That butterfly pattern, which has been drawn on my chart here for what seems like forever, has a price objective of around 96.30. The actual high that we saw today was 96.06. So, does that mean that that's a 1.618 butterfly? Does it mean if price gets to 96.30, 33, 35, 40, somewhere around there, the price is automatically going to reverse? The answer is no, but this is the strongest of the four indices out here. And the strongest of the four, which has a characteristic of making a high with light volume, it had that today. And in essence, it really completed this 1.618 butterfly. Like any pattern out there, though, you need some kind of reversal signal in order to pull the trigger, because there is no reversal signal. There's only the potential right here with regard to the pattern that was formed. Now let's go switch back over. We'll switch. We'll take a look at a different chart. Let's go take a look at the NQ. Let's take a look at the futures contract out here. Pull that up here in just a moment. We want to see where that is trading. 39.20 is the number inside of the NQ. Oh, pop up on my screen for me. Oh, looks like I deleted the chart. Did not mean to do that. Let's go ahead. We'll put the daily up here. Just give me a moment to switch over to the daily time frame. So we've got the NQ trading at 3920.75. Got the futures contract that'll close here in a bit. The key number inside of the NASDAQ. Give me a moment here to put one more thing up on my chart. Style. Do that one more time. There we go. What I want to take a look at here is our TAS signal box market profile. You're going to see that price right now is ever so close to trying to get above resistance. Actually, it's trading just above resistance. 39.18 is the number out here. Now, closing above 39.18 would give you more promise from the bullish side of the picture, and you're really trading just about on that number. You're 39.2075. That's not exactly taking on the resistance area with any kind of conviction. You'll see here if we go take a look at, and that's really what was needed today in order, even though we've had a big market move, that's still what was needed in order to be able to break above a resistance level. So the combination of the Qs on light volume, the NASDAQ that really hasn't broken above resistance out here, then you combine that with what's going on under the covers inside the S&P 500. If we take a look at that right now, you'll see that price today got up to a high inside the ES Mini, got up to a high of 1974. Interestingly enough, 1974 is the exact number on the spot for resistance. So it has not broken above resistance on a day like today. Now, you're coming back tomorrow, should be heavier volume. The question is going to be, is that going to be volume moving higher or volume to the downside out here? What I can tell you is on 2 of the 4 that we've taken a look at out here, meaning the Qs, the NQ, now the ES Mini, it hasn't really given us that sign of truly breaking out. Let's go take a look at the message inside the Russell 2000. Russell 2000 inside the futures contract, trading up about 6 points right now. We're going to see the Russell 2000 did. The resistance area, which used to be old support inside of this, which the Russell broke, by the way, on July the 8th when it moved to the downside here. Today what it did was it got up to a high of 1170. 1175 is the old support area. Old support is now resistance. In order for the Qs to join in on this party here, they really need to, the Qs, the Russell 2000, it really needs to close above 1175. It was not able to accomplish that task today. If we take a look at the Dow, a little different picture out here. The Dow is really the strong indice at the moment from the standpoint of taking out a market profile. But what it didn't do, interestingly enough, didn't close above the swing point. So the swing point that I'm looking at is from July the 3rd. And that high is 16,994. You're at 16,978. It traded above that today, but it gave it up. Volume today inside the Dow futures, 104,000 contracts that traded. Versus July 3rd, again, a shortened trading session, 74,000 contracts, but it wasn't able to close above that. Now, look, the Dow here is making a higher high. It's doing it on less relative strength. That's never a good scene, but that can resolve itself over time, over days out there. But it really, today was an opportunity to get above a swing point. The Dow itself didn't do it, and that's really the strong indice out here. That's certainly the strong futures contract. So that's what's going on there. If we go take a look at what's going on inside the gold complex, we had gold traded down as low today as a price level of, let's blow this up on my screen out here. It came down to a price point of 1302.20. Now here's what gold did. I'm going to put up a couple of different charts for us. We're going to take a look at the daily chart here for the gold contract. I want to put that up on my screen here. It's one of the Rhodes momentum indicator signals out here. So if you're watching us on Tiger TV, I've got the continuous contract for gold up on my screen. You're going to notice a couple of different patterns out here. Number one, when we go back to the lows out here in the marketplace, give me a moment here. We take a look at the lows that were put in back here December 31st. You'll see that price was moving down on less relative weakness. If you're watching this on Tiger TV, the bottom of my chart is the relative strength index. It's over a period of 14 days. Helps us really to identify the momentum, the real oomph. It's a momentum indicator. Helps us to identify the momentum of the marketplace out there. And you can see that it was pushing lower with less relative strength. At the highs out here, you can see that on the highs that I'm referring to now, March 17th, it was pushing higher with less relative strength out here. So at the bottom, less relative weakness. At the top, less relative strength. And guess what the pattern is here today? As price was moving up into July 10th, it was moving higher with less relative strength. And today, big old bearish engulfing candle. This engulfed today's session, took us all the way back into the breakout area, that breakout area from June 19th out here. We get back from this first break. Let's go dive down into Goldilocks. Let's take a look at a 240-minute chart, maybe a 120-minute chart, and let's see what the message there is. Because I believe that Goldilocks broke through its rising price channel. Something to think about. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for this evening. Again, our call number is 877-927-6648. Hope everyone had a great great weekend. No holiday, but had a great weekend, and you're off to a good start of your Monday. We were talking about gold before we went to the break. So gold off $29 right now, trading out at $13.08. We looked at the daily chart. Let's go under the covers just a bit. Let's go see what's going on the shorter-term time frame. And what I'm going to put up on my screen here for you, I'm going to put the 4-hour chart. It's going to be a little bit easier for you to see out here. And what I want you to notice inside of gold, gold has been traveling in a pretty nice rising price channel. And it's been doing that off of the lows back here in June 5th, to be exact. And what I'm looking at is I am looking at in the price channel here, what we're taking a look at is the body of a candle. Doesn't matter to us whether it's an open or a close. You're trying to find the largest number of co-located opens and closes out there. So we're not really interested in the wick of the candle. The wick is nothing more than the extreme emotion during the trading session. This happens to be a 4-hour trading session that we're looking at. And what we can see here is what gold actually did today was it broke through the rising price channel. Now, here's what I expect we'll see take place overnight, because what gold has done here, and in fact, I'll put it on the 120-minute chart here just for a moment. And what you're going to see if you're looking at the very bottom of my screen, that also is the 14-period relative strength indicator out here. And what you're going to see is that got down into the extreme oversold condition. Now, in a market, it doesn't matter whether it's gold. It could be a currency. It could be a stock. It could be an indice. It could be a commodity. Markets can only stretch so far. There's these little rubber bands. The question becomes, when you stretch like this did on its 120-minute time frame, when gold stretches as far as it did, the question is going to be, what's that snapback going to be? In this case here, ever since moving down to that extreme oversold condition, there hasn't been much of a snapback at all. So the real key is, has gold broken through its rising price channel? And this is how we know. Number one, in order to work off this oversold condition, price needs to do one of two things: either move sideways or go ahead and bounce up from here. Now, the bounce up from here would go ahead and take it back, try to take it back to the bottom of its rising price channel. It depends on what time it tries to get that done. Let's say around the 2 o'clock in the morning time frame, maybe around 3 o'clock in the morning. I would say you're looking at a price right around $13.17. You're at $13.08. So if tomorrow morning you wake up and gold is up $11, let's say, somewhere around $11, don't believe for a second that the move to the downside is over. All that would be taking place at that time is just trying to get back inside its friend, the trend, which is the rising price channel out there. I suspect what we're going to see is we're going to see another move down. This is perhaps just setting up the A to B of A to B equals CD to the downside out here. I suspect what we're going to see is gold move lower. It's going to get pretty scary out there, and that scariness is going to be the time that you're going to actually want to jump in. Now, the real key as to whether or not that is going to happen. In fact, let me put the 240-minute chart out here. What I also want you to notice is gold has moved back into the breakout area. Now, the actual breakout area for gold took place at around between 8 and 10 in the morning, and that was back on June 19th. That was the most recent breakout. That's at a price level of $12.8220. You're at $13.07. Now, gold doesn't have to come back and test the bottom of that rising price channel. It could just simply move sideways for a while and then take its next beeline south out here. And what you're going to want to really pay attention to the downside is going to be what happens when price gets back, should price get back, to that 1282 level. If it starts taking that out with conviction, that's where you're going to see a large move down. You'll probably see a large move down very quickly, very fast, and it would take place likely over the next couple of days out here. You could even see gold, if it breaks 1299.20, 1299.20 happens to be it's a market profile low out there, so that's going to be a key level. Wasn't tested today, but that's going to be a key level. I would have to say that gold would likely pull back into the old June 3rd level, June 5th level, where it broke out. That says gold can pull all the way back to 1240. Now, if we go take a look at volume out there, we take a look at the GLD. Let's go do that here. Just give me a moment here. We'll put up the GLD chart. What we're going to see is volume is light. But nonetheless, what I can tell you, and I'll put up another chart on my screen, volume today inside the GLD, just as a reference for you, came down with 11.4 million shares. That was after that breakout session of 24 million shares. So it is pulling back, the GLD at least, is pulling back on light volume. Now, what the GLD has done today is it broke through its market profile support level. That's at 126.40. Shouldn't have done that. It should have held that. Instead, it gapped right through that. So that says to me that this is what you really want to see with regard to a pullback. But I still think it's going to be a scary pullback out there. And if you ask me the reason why, you know, I did get a chance to update the chart out here. But the reason why is because the large commercial traders have been sending out a blaring message. I do mean a blaring message, that they wanted to see price move lower because they were ramping up their net short positions as a percentage of open interest. They have been doing that over the course of the last several weeks out there. That's not the pattern behavior that you would expect if gold had made a final bottom out there. So that's what's going on inside of gold. In the post-market out here, we've got Apollo Group, Apollo Education out here. APOL is the ticker symbol. That is trading off about 7%. Let's go see what that is doing, where that's trading into. Apollo Group, last trade fired off at 27.50. This closed at 29.57. So 27.50. This closed today below its market profile low. That's the green horizontal line going across my screen. Very similar to what we saw take place in GLD. And what Apollo Education Group has is a high volume low. And that's where she's headed. Now, the bottom of that high volume low, we'll pull this back a little bit further, is at 26.05. And I said this is already trading out at 27.65 out there. So it is likely it's going to trade inside that candle. Well, it's already been inside that candle session. Very likely going to make a run for that area tomorrow. Now, if it takes that out with conviction, what that likely sets up here, well, it's going to set up an A to B equals CD to the downside. Let's go take a look at what that pattern would look like for us. The A point on this is going to be the high from January 22nd. The B point on this, we're going to go ahead and use that high volume low from May 22nd. And the C point is a little retracement up into July 3rd. The 1-to-1 A to B equals CD to the downside takes this equity to about $22.23. Anywhere between $19.55 and $22.23. This did have a little breakout session, nice breakout session. So coming back to the breakout area would take you all the way back to the October 22nd time frame. That price level right around $20.47. So it's right inside that area if it takes out the 26.05 area tomorrow. That was on Apollo Group out with numbers here. I don't see the actual. Let's see if I can see the news behind it. I don't have the numbers posted. If we take a look at some things that were moving in the marketplace today to the upside here, we had Priceline leading the charge up, at least dollar-wise, up 13%. We had Perigo Company, PRGO was the ticker symbol. That was up $12.70. Had some nice volume behind that move. When we get back from this break, we'll go take a look at Perigo. We'll see where that is headed to. Took out its most recent swing point. That was from the trading session of July 7th. That only had 1.5 million shares. Today, up with 8 million shares. 877-927-6648. Again, the Dow finished up 111. The S&P's up about $9.50. Steve Rhodes, TFNN. Thanks so much for joining us, folks. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. I kick things off here at TFNN each morning from 9 to 11. So if you're wondering what the market is doing, if you see futures are up, futures are down, just tune in. If we're not on a radio station in your area, you can always grab us by going to the homepage of TFNN.com. That's one way to do it. And you can either watch the show live in the upper right-hand corner. You'll see a little smartphone type button. The show will stream live. You'll be able to see our charts out there. You can always listen to us on the radio, TFNN.mobi. You can plug that into your phone. Of course, if you are a subscriber to the eSignal version 12 package, Tiger TV is now direct inside the application, so you can resize the window. That's another great way to be able to take Tiger TV with you 24/7. Of course, we are 24/7, 9 hours of live program, and then it gets recycled each and every day. Have a request to take a look at EWZ by one of our Tigers in the Tigers Den. That's our trading room. If you're looking to pick up your game, if you're looking for a, the way to be able to, if you were an athlete and you were playing golf or you were playing tennis, one of the best things to do is to find what do you think you'd learn more from, a better player or somebody that's not as good as you? Yeah, you know the answer to that. You always want to be able to find a peer group that's doing better for you. That's really what our Tigers Den is all about. So you can test drive the Tigers Den for 30 days. If you haven't done that, you can see all of our charts in HD as well. I tell you what, we'll get back to EWZ in just a few. Let's go out to John in Austin, Texas. John, thanks for calling. Thanks for holding. How are you today?
I never knew it could get this good. How about you, buddy?
Well, that's good. You haven't gotten this far in the dream yet?
Hey, buddy, I'm working on it.
That's great. All right. Hey, you wanted to take a look at Allied Nevada Corp. ANV is the ticker symbol. Tell me what you're doing, your time from the trade. What's your time horizon on the trade out there, and then I can best help you.
I'm just after the carnage today, I'm very concerned, and I'm up probably 16% in the stock right now, and I'm just considering after what's gone on today is to maybe just to bail out and wait and see how let the dust settle. Okay,
so you're up 16%. Are you trading with stops? So let's say with a bracketed order, both exits on the downside as a stop as well as your targeted profit area, or is this something? Go ahead.
I'm sorry. Go ahead, buddy.
No, you go right ahead.
I have a stop around 5% above, what I purchased at, so I don't lose any money. But as far as on the upside, I was looking at 408, and 408. When it went above that, I was thinking maybe it may be able to get up to 450, 480.
Yes. Well, let's take a look at ANV, irrespective. Let's take a look at its message, irrespective of what we saw in gold or what we saw inside the GDX, as well as the XAU. Now, the pullback today inside many, I didn't get a chance to take a look at all of them, but inside many of the metals, kind of a beautiful thing, as Tom likes to say. Specifically, if you take a look at ANV, today's pullback was on 3.5 million shares. And John, when it broke out, it's got the trading session, even of June 18th, which is where it's pulled back into, that's got 4 million shares. So at least the pullback inside ANV is on lightish type volume. I don't know what tomorrow holds. What you want to see it really do is, if you're watching us on Tiger TV, you're going to see 3 horizontal lines going across my screen. The red line is what's referred to as a resistance area, or the unfair high on its market profile. And that really should act as support, 365. If you see it close below that, I can give you some target areas where you're likely to see price travel to based on how price reacts. If it closes below 359 is the number. If it closes below 359 tomorrow, what it will likely do, whether it's tomorrow or the next day, it'll probably move down to about 339, what's kind of referred to as its point of control, its congestion area. Just like driving down some street in Austin, there's probably some expressway where it always gnarls up right in the same area. And they have no idea why, but it does. Inside a stock market, its congestion area inside A and B would take you to about 339. And then finally, it needs to hold 319. So if it pulls back to the 339 area, does that stop you out of your trade? Or is that just getting pretty close?
It's getting pretty close. I think I'm in at something like 310, 308, 12, in that area.
Yeah, if your horizon is a longer term horizon out here, my expectation is, and we'll see what gold does overnight. And really, gold started selling off last night, probably about 2:00 in the morning. 2 or 3 o'clock in the morning. So we'll see what happens here, in the overnight hours out there. But we got enough indications. I have enough indications, and one of those is on a longer term horizon. The CFTC publishes the commitment of traders data each Friday, and that allows us to go in and glean through the data and understand what the large commercials, and that's the big money players out there. That's presumed to be the smart money. And we get an opportunity to see what they're doing as a percentage of their open interest. And they have been broadcasting loud and clear for the last several weeks that we should see one more move down in gold. How far that's going to be, if it's just going to be a retracement to the 0.618 retracement level or what have you, that I don't know just how far down it's going to be. But I do believe that what you're looking at, John, is a significant market low. So if your horizon was a longer-term horizon, I would say sit tight, just leave your stops in place. But, one thing is for sure, this is a business about making money, and you can always get back in. And you can get back in if Allied Nevada breaks the most recent swing point high from June 24th. That's got volume of 6.7 million shares, or July 10th. That's got 5.5 million shares. If you see it get above those levels at 408 area, you can just jump right back on the train because it would be a large A to B equals CD to the upside. So I think you have a lot of good options. It's really your temperament, your outcome, your objective from a time frame standpoint. But I did like the pullback today on Allied Nevada, and it doesn't have a high volume low. It doesn't necessarily have a reason why it needs to move all the way down. The problem is that all of these miners will go in the direction of gold for the most part.
Yes, sir.
Does that help? Does that help you out, or?
Absolutely. I don't want to take up all of your time. I was wondering if you could look at AG, and if you can't, buddy, we'll just hang up and all the best.
We can do that. That's not a problem. So AG is the ticker symbol. That's First Majestic Silver. If we take a look at its retracement today, now it was backing off with some volume here. So unlike Allied Nevada, the volume today was expanding to the downside, 2.2 million shares after making a high with 2.1 million shares. So it's not a huge expansion, but still was expanding with volume and moving down into the area where it had broken out. Now, this broke out on June 19th with 2.1 million shares, and there's a little bit of an open gap, a little open window. The question will be inside AG, First Majestic, is what happens as it gets the $9.93 area. Now, the key level that you want to see tomorrow is you would like to see it hold that $9.93 area and actually close back above 10.06. That's its market profile low out here. Once a stock breaks that, those tend to act as resistance points on the way down out there. So that is what I would be looking at inside of First Majestic. If I take a look at its lows, I still don't see any reason why it needs to back off all the way to the bottom. A natural retracement after the move up here, just a natural 0.618 retracement would take it to about 937, which is really the bottom of the breakout session from June 18. Can you withstand that kind of heat if it pulls back there?
I can, because, like I say, I'm up in that stock, probably, 15, 16% also.
Yeah. I think the way to trade both of these equities, ANV today, no idea what tomorrow brings, but ANV today looks a little bit better just simply because of the lack of volume. There was not really much in the way of expanding volume inside of that equity on the way down. I say again, you've got options. Maybe one of the options is take part of your money, right? Maybe tighten the stop up on half or third. And, with the idea of if it pulls back, also being able to buy in at a lower price. That would be a nice move, too.
Absolutely. All the best to you. I so appreciate your time, man. Thank you so very, very much.
My pleasure. Thanks for listening to TFNN. We appreciate it very much. Have a great day. That was John in Austin, Texas. We took a look at two stocks. One was a silver stock, First Majestic. The other was Allied Nevada, a gold mining stock out there. And, I was talking about the XAU. Let me go put that up on my screen here. Give me a moment. We'll put that up And what we're looking at inside the XAU, it too has a price relative strength divergent pattern. The XAU finishing out this session today at 101.36. What do I mean by that? I mean that the XAU on the trading session here of June 19th, which was the breakout session, moved higher and pushed its relative strength indicator, its 14-period relative strength indicator, up into a level of, well, I think I can tell you what it was, 77.71. And then the XAU continues to move higher, but it does it on less relative strength. And then it creates this little key reversal session right here on July the 10th out there. Not a good thing. The positive, though, this is positive for you, John, as well, it still held its old resistance level. The XAU likely to trade down to about 99.48, and then we'll see what happens when it gets down to that level. 877-927-6648. Steve Rhodes, TFNN.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for the evening. We had the Dow up 111 points out here, S&P up 9.5. We want to go take a look at the EWZ for one of our tigers in the Tiger's Den. EWZ is the iShares for Brazil. Excuse me. As we take a look at the daily chart, we're going to take a look at both the daily and the weekly chart, try to get a read on it. Now, this morning here, gapped up. Now, that's not unusual to see gaps inside of these ETFs, especially when you're taking a look at currency conversions and so forth. But what it did do, it had volume in it. It was 20.7 million shares inside this equity. Now, the swing point that it's going against looks like it's right around June the 18th, June the 19th. Let's use the highest volume day out here, June the 18th. That had 18.8 million shares. So today you're going into it with volume. The high of that swing, you had $50 even Steven on June 18th, $50.07 on June 19th. It closed at $49.80. So the good news is that it didn't take out the swing point, but it is moving into it with volume. It says that $50.07, today's high was $49.92. $50.07 is going to be tagged. And if we take a look actually on the daily chart, I think I've got, now let's put the weekly chart on my screen. So it does look bullish to me. If it takes out that area, if you get it close above that with the volume, it sets up a rather large A to B equals CD. Let's go see what's going on the weekly chart. Again, EWZ is the ticker symbol that we're looking at. It's the iShares for Brazil out here. And what I want to show you is I want to show you the larger trend. In this case here, I'm using a trend line. And what I'm doing is I'm going all the way back to the trading session, little doji-style candle from the week of April 4th, 2011. I'm using the top of that, so I'm using the extreme emotion of that trading session. That's at 78.93. I'm using that as my touch point. The next touch point out here that I'm using is back in February of 2012, the weekend in February 27, 2012. That high out there was $70.74. So use that to set up your trend line. And what you're going to see is that price today gapped right up into that trend line. On a weekly basis, it is saying that if it closes above that trend line, which for our purposes, we're going to go ahead and use that 50.09. Now, look, $50.10 is not going to make a big deal out here. But if it does close above that, and by the way, the weekly volume is 68 million shares. You're already off to the beginning of a week on a light trading session. Remember, when I opened up the show, we took a look at the Qs. One of the lightest trading days of the year out here. And we're in the summertime, and this today you already had 20 million shares. So if this does take out and change that trend out here, what you're looking at is a large A to B equals CD. Now, on a weekly basis, that would take you up probably, I would have to say, the A to B equals CD pattern probably looks like this. Takes you or projects $57.61 to $60.82 out here. And if I pull that back, that would say it wants to come back towards, not all the way to the highs, but that is EWZ. And even though Brazil disappointed many of you footballers out there, it's not really a disappointment when we take a look at the ETF structure out here. So I hope that helps. I think that was Mike K in our Tiger's Den. So let's take a look at where we're at before we wrap up here. We've got about 4 minutes, and what it is that Stevie Son here is taking a look at. Number one, if we go back and look at the Qs out here, the Qs today moving higher on a volume of a total of 19 million shares. So it looks like we picked up just a little bit of volume here today. We put that stock chart on my screen. We know that the Qs have either or are very close to completed a 1.618 A to B equal a 1.618 expansion out here. 96.34 is its price projection. So it's getting very close to a pattern out here. Today is a signal of potential, very much potential toppiness. On the bullish side is at the VIX index. We'll put that up on our screen here next. The VIX index closed below the 50-day exponential moving average. When the VIX index closes below the 50-day exponential moving average, and it's just kind of really just slightly below, the actual 50-day is priced out at 12.05. It closed at 11.82. What you don't want to see if you're bullish tomorrow is the VIX getting back above the 50-day exponential moving average. When price gets below the 50-day, one of two things happens. The market moves sideways or it moves higher. When price is above the 50-day, markets move lower. It only does one thing out there. So that's something to be paying attention to. My favorite currency pair and yours, because it tracks the U.S. stock market better than anything else, that is the Euro-Japanese yen. The Euro-Japanese yen has been able to defend its lows out here. Its lows, by the way, 137.65. Nice trading session here today. A bullish reversal signal, little bull sash candle, but it found resistance at its 13-period exponential moving average out there. We'll see if it can take that out. From a bullish standpoint, you want to continue to see the euro move higher. From a bearish standpoint, you want to see the euro to continue moving lower out here. Right now, it's just kind of neutral with regard to what it is doing, any kind of signal that we've got coming to us. With regard to gold, in the gold market, we're going to watch what happens as the oversold condition on the 120-minute chart gets worked off. And we're going to really be paying attention to its rising price channel that it broke through on that time frame. That says that a bounce that would take gold up to maybe about the 13, 14, 13, 15-ish type level is likely where we would see Goldilocks move to. If it get back inside that rising price channel, then that would bode well for the bulls out here, but I expect we will see a little bit more carnage inside of the gold complex out here. Inside the futures market, if I take a look at some of the shorter-term charts out here, I'll just go to a 30-minute time frame. We'll see here that the ES Mini, the S&P futures, had a nice little break, topside, nice little bullish move. This was back at about the 3 o'clock time frame in the afternoon on July 11th. We're now just beginning to see a little lagging indicator, but a crossover of a set of moving averages that would suggest that price would move lower out here. Let me go see if I can get the NQ up on the screen. There we go on the NQ. On its 30-minute chart out here, we don't have that same pattern in place. So at this stage, the NQ really just kind of consolidating sideways. So we'll want to pay attention to the NASDAQ futures for any kind of signals out there. As far as what's going on inside of the pre-market, so far, the only real signal that I've got out here inside the pre-market is from Apollo Education Group out here. Apparently, the Department of Education is going to review the University of Phoenix's administration of its federal student financial aid, its Title IV programs out there. That is closed at $29.57. Right now trading out at $27.75, down about 6% out here. Folks, thanks so much for joining me. Tune in tomorrow, 9 o'clock in the morning at TFNN.com, TFNN.mobi, or radio station. Have a great Monday. I look forward to seeing you soon. Take care.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests. And
well, listen.
Keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Good day, money masters and treasure hunters. Welcome to the July 14th magnificent, magical Monday edition of the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom while he is away. I'm the morning anchor here at TFNN. I kick things off each day at 9 a.m. You can catch me on a radio station. If we're not on in your area, you can always tune in by going to tfnn.mobi. That's an easy way to do it. You can always watch our show live on Tiger TV. You can do that also on your mobile device by going to the homepage at TFNN.com. Upper right-hand side, you'll see a little button, 3 smartphone devices. Click on that. This show will stream live to you. So if you're wondering what the futures are doing in the market in the morning, where things are headed to, just tune into the show. I cover that during the first segment. Of course, if you're at work, just put a little earbud in your ear. Nobody will be the wiser out there. Of course, we stream live for 9 hours each and every day. So welcome to all of our new listeners out here. Or technical analyst. I utilize tactical tools such as the A to B equals CD patterns. That's a lightning bolt. I'll show you some of those patterns here this afternoon. We take a look at Fibonacci retracements and expansions. They happen to be little floors, measuring floors in the marketplace that are really good guidelines as to where price is going to travel to. We take a look at swing points. Swing points are nothing more than a major intersection. If you're driving at home this evening, you'll pass some major intersections. You'll pass some minor intersections. We look for where the big changes in trend take place. We use those as our anchor points to do our measurements of our Fibonacci expansions and retracements out there. And, of course, we always take a look at Japanese candlesticks. Those are the signs that the bulls and bears make for you and I each and every trading session. I also have a newsletter service called Mastering Probability. If you'd like to test drive that for free, you just click on my name on the homepage at TFNN.com, and then click on Mastering Probability. You can test drive that for 30 days. Unconditional money-back guarantee. This is a show, though. It's all about you. That means that you can give us a call at 877-927-6648. We'd love to field your call, answer your question, assist you however I can. Just feel free to give me a call. With the Dow finish up 111 points today. She closed out at 17,055. The S&P up 9.5 points. That closed at 1977. NASDAQ Composite closing up 2,500. That closed at 44.40. Russell 2000 up $5.68. Let's take a look at what's going on indice-wise. Let's start off by taking a look at the Dow. So we had the Dow today try and close above its most recent swing point high. Should have been able to do that. That was July 3rd. Markets moved higher July 3rd. That was a shortened trading session. It was light volume out there. In fact, if we take a look here, I mentioned during the first hour the volume inside the ETF for the Qs, which is a real bellwether as to what the market is doing out here. Light volume inside the Qs tend to make highs out there, sometimes also referred to as distribution. Now, the diamond started off with a bang this morning out here. Let's see if it was a bust. And then check in on the diamonds out here. What did the diamonds do? The swing point was July 3rd, 170.47. Price got over that, 170.61, closed at 170.29. Volume today, 2.8 million shares. Boy, it really was a bust. It was only 2 million shares on July 3rd out there, but volume was pretty heavy in the morning. That was between the 9:30 and 10:30 session out there, and then it just simply kind of dissipated. So you've got a test of a swing point with some volume, but you got to put that in perspective. I'm not doing the math out here, the algebra, but you could do it. We were only open from 9:30 till 1. So what is that, about 3.5 hours versus 6.5? Seems to me like it was a test on lighter volume and a rejection. Now, that alone does not make it a reversal out there. So that's what the Dow diamonds were doing. If we come back and we take a look at the Dow, if the Dow is able to get above the July 3rd area, then what it's doing is setting up an A to B equals CD to the upside. The A point on this is going to be your low from May 20th. Your B point out here, we're going to use a B point. We're going to use the high from June 9th and then a little retracement down into June 12th. That would say your 1-to-1 A to B equals CD inside the Dow would take you to 17,335. 32. Now, if I put the inside the Dow, I'm going to put the monthly chart up on my screen just to kind of give you a picture as to what's going on the longer-term basis. Let's do that. As we take a look at the Dow, we're taking a look at a 15-year consolidation that it was traveling within. That's a little sideways move. That consolidation taking you back into 1997. The 1997 area was cementing the lows. That was down in the 7,200 range. We saw a test of that area back in October of 2002. We saw another test of that area back in March of 2009. The top of the consolidation was cemented back in 2000. That was up at the 11,750 area. Price had broken above that back in November 2006. It made a price relative strength divergent pattern. That's where price moves higher. Does it on less relative strength. Gives you a reversal signal. That's what it did the month of November of 2007. Then when price got back inside the consolidation, as so often happens, price will go back and revisit the bottom because that is a signature of a false breakout. Then, coming off of the March 2009 lows, back in the trading session here of November 2011, price finally broke back above the consolidation, and it completed its move. The completed move projected price out in the 16,300 level. This is what's called a measured move out here. Price equals or it's equal to or greater than the measured move, greater than the consolidation. So that's what's going on inside the Dow. Its work to the upside, in essence, has been done. If we go take a look at the S&P 500, let's do that. The S&P 500 today closing up $9.50. The S&P closing at 1977.10. Now, the S&P failing to take out its swing point from July 3rd, so a little bit weaker than the Dow is. The S&P 500 has a 1-to-1 A to B equals CD, using the same swing point time frames, if you will. The April 11th area, that's your A point, that's the low. That's out at a price level of 1814 and change. Your B point is a move up into the price level of May 13th. That's at 1902. Little retracement down into the May 15th area. That is the lightning bolt. Your 1-to-1 A to B equals CD. That completed back here on the trading session of June 9th. It then made it to the next level. That's your 1.272 Fibonacci expansion. If, in fact, the S&P can close above the July 3rd high, that says that price ought to target the 2,000 area. That may be where everybody is coming up with the 2,000 price point. If we go take a look at what's going on from a longer-term basis inside of the S&P 500, oftentimes we focus on the shorter term. I want to give you really the longer term as far as and as well as the daily as far as where we're at. If you take a look at the longer term, unlike the Dow, which has completed its measured move of its consolidation, we take a look at the S&P 500, it has not. It's been in a 16-year consolidation. That taking us back into the time frame here of 1996, December of 1996. You can see it consolidated in between the levels of about 793 up to the highs in 2000, right around the 1552 level. We saw price just simply travel within here and finally break out of that consolidation back in April. That's April of 2013. Its measured move would take you up 800 points above the breakout. Well, if the breakout is right around the area of 1576, that says you've got a measured move up to about the 2350 area. You are at 1977. This is a longer-term horizon as to where the S&P is likely to head to. If we go take a look at the composite, let's go take a look at the NASDAQ composite. This closed up a total of 25 points today, closing out at 4440. Now, the composite here was unable to take out its high. If we take a look at retracements here, its most recent retracement, what we will see is the high back here on the trading session of July 3rd, down to the low back here on July 10th. What we will see is that what the composite was able to do today is get up to about the 0.786 retracement level. That's using our swing points as our rulers to understand where price is traveling to. That level, by the way, 44.57. Today's high, 44.51. So it has made a 0.786 retracement, oftentimes an area of where price will move back to. What the composite has to do is move above the level of 44.85 in order for it to continue higher. But if we take a look at the monthly chart for the NASDAQ composite, what we're going to see is the NASDAQ composite has completed its measured move. This happens to be a 1,500-point consolidation that it had been traveling in ever since December of 2000. Finally broke out with some conviction, and that took place in November of 2012. It completed its measured move. Now, the bullish side inside the composite will be where's it going to close this month, because last month it closed inside its all-time swing point high. As you know, when you close inside a swing point, it says you can go test the high, volume or not. Well, inside the composite, that would be 51.32. But its measured move, its consolidation move, is complete out there, and therefore it does not need to move higher, but it most certainly can. We had the Dow finish up 111 points. When we get back, let's go take a look at Goldilocks. Let's take a look at gold. We'll take a look at the silver. And, of course, anything else that you'd like to. All you've got to do is give us a call at 877-927-6648. I know you get a little apprehensive making that telephone call, but I'll make it as comfortable as I can. Just give us a call. We'll take a look at your equity when we get back from this break. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to his subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom? Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for the day. And as we do each Monday at 20 past the hour, we've got our Investors Business Daily Update, presented by none other than Amy Smith out there. For those of you not familiar with Amy, she's a market commentator and a host on the IBD Market Wrap. Now, you can hear that every Saturday afternoon on AM 870. Of course, that's in the California area. And the show is called How to Make Money in Stocks with IBD. Amy's also authored a fabulous book, How to Make Money in Stocks, Success Stories out there. It's a must-read, in my opinion. Make sure you add that to your library. Amy Smith, good Monday to you. How are you doing today?
Oh, hi, Steve. Well, I'm doing just great. I just returned from Boston, which is, of course, Tom's old stomping grounds, and it was just really, the weather was just perfect. The people were so nice, and these folks have had a rough winter. So the fact that the weather's so beautiful, all the sailboats were out. People were jogging all over the place. The Boston Common was full of people. Yeah, it was great.
And I understand that for breakfast you were eating out at Regina's.
You know, it's funny. Tom sent me there. Let me tell you what happened. He said, you've got to go. You've got to get the pizza. It's the best in Boston. So after my talk in the morning, the level 1 on Saturday,
yes.
I went up to the room. I got changed. So it was about 3 o'clock. So it was an off time. I thought it was done with the lunch crowd. I took a taxi there, and you know what? The line was down the block. I couldn't wait that long. So I had to not eat, unfortunately, there.
You got to just tell him that you know Tom O'Brien. That's the whole key to getting in.
He didn't give me that message.
Oh, he did. Actually, it's not so much the pizza. The pizza's great, but it's this stuff that they put on the pizza. I forget what they call it. So if you had gone there and only had the pizza without the gunk, of course that's not what they call it. That's not a real good appetizing name, but it is something like that. When Tom and I were up there, he took me there in the wintertime, and we had to stand outside. So I know what you're talking about as far as the line.
Oh my goodness.
We had to stand outside, and I'm a Florida boy, so I don't do that well in the cold these days. But we did it nonetheless, and it was great pizza for sure. So,
well, was it good because was it the sauce or with the sauce they put on it? What made it so unusual?
Yeah, really, it's the sauce. Nice kind of thin crust pizza.
Okay.
And there's a special name that they have for that sauce. Maybe somebody in the den knows. I apologize for not remembering. But it's, every city, especially a city like Boston, has got a lot of great ethnic food. I'm originally from Detroit, so I would have taken you to probably Greektown or something like that.
Oh.
They've got some garlic dip called tzatziki out there. And it's when I say garlic dip, you taste it for the next 24 hours, but it's great going down, that's for sure.
Well, I'm going to be in Detroit. Not until November, so I'll have to try that. You say that it's one of the Greek places.
Yeah, well, I'll get your stomach. Do you have a cast iron stomach?
Yeah.
Oh, good. Okay, then I'll send you a whole list of places to go to.
Okay.
Now, how about the market? What's your take? What's IBD's take on the current market conditions out here?
Well, of course, today we had the upbeat earnings from Citibank, and we had merger and acquisition activity.
Yeah.
We also got a boost today. Goldman Sachs analyst raised his target for the S&P because, he pointed out the fact that the 10-year Treasury note was around 3%, and it's going to continue to push investors into stocks as we look for higher returns. Now, having said that, we have a little bit less. We ran into some trouble Monday and Tuesday last week. And so the IBD outlook was changed to market under pressure. Then we got a boost from the Fed on Wednesday. Even though they expect to end quantitative easing, that's kind of been baked into the market, so that wasn't a surprise to anybody.
Right.
We had Alcoa that kicked off. Who expected that? 157% increase in earnings. And, of course, the aluminum's been used in cars and in cell phones because it's lighter. It's a lot lighter than some other metals.
Yes.
So that was interesting. Of course, we are right. We're right in the thick of earnings, and I think that, honestly, Steve, we're going to see, when we see later this month, around the 21st to 23rd, we've got Facebook, Chipotle, Netflix, and Under Armour, and they're all setting up. They all look good, and I would say if we're going to really take off here, we need some more good earnings numbers.
Yeah, and anyone specific that looks the best to you? You know, you mentioned Chipotle. How's that? Looks like that's trying to break out and get above its highs, its weekly highs back from March of 2014 out there.
To be honest, you never know how these stocks are going to do as they go into earnings. But Facebook, Netflix, Under Armour, they're all setting up. They all look pretty good. Even Tesla, to be honest with you, setting up on a cup with handles. So it's all going to depend on those numbers. Do they satisfy what Wall Street is expecting that they'll do, and how is their forward-looking guidance?
Right. And last week we had lumber liquidators, so that had tanked. They did lower than expected earnings, and what's your take there?
That was kind of the stock had been on the weak side even before they reported those earnings numbers. It was not looking technically very good. Mm-hmm. But really what hit them the hardest, not only did they say they disappointed and they went from earnings up 48% down to negative 14%, and they said the first-time buyer is having a very difficult time getting into a home. So we have a lack of first-time buyers. The houses have gotten so expensive in many parts of the United States that first-time buyers like my daughter, or they can't afford those the houses that are on the market that are startup houses. And if we don't have new buyers going in, then they're not going to remodel the homes, and then that's going to affect a company like Lumber Liquidators that makes this beautiful hardwood flooring.
Yeah, and what's the housing market like in your area? Does your daughter live in
LA? Unfortunately, it's fairly strong, and it's fairly strong. It's fairly pricey. We're seeing really. I see a sign go up, and I see a house sold fairly quickly.
Mm-hmm.
It's the housing market, but I think that the more difficult the market is the startup market. The starter market, we're not getting enough new people into that. The real starter homes.
Yeah, what a great opportunity with interest rates being so low.
Right.
A lot different than when I purchased my first home out there. So what it is Lumber Liquidators, so that had some trouble out there as we've been talking about. There are some stocks that are setting up if the market really begins to take off. Or I guess you really mentioned that Chipotle and Facebook out there. Anything else that...
Alaska Air is looking pretty good. The biotech stocks, in terms of the drugs and the pharmaceuticals, my goodness, I could give you a whole list of those. Biogen has treatments for multiple sclerosis. That one's setting up. Believe it or not, and this is crazy, Steve, Monster Beverage. I would have thought with, how many different energy drinks do we have on the market right now? I mean, there seems to be a whole ton of them, and yet Monster Beverage is kind of setting up. We'll have to see if it really takes off. But those are just a few that are setting up. We still have this week is the real test for the banks. We have Goldman Sachs, we have J.P. Morgan. Today we have Citigroup. Wednesday we have Bank of America. So we have to see how the health of the financial markets go. Citigroup kind of surprised everybody today with some really good numbers.
They did. Well, I'm not much of a Monster Energy drinker. But I did back in the 2006 time frame. I was able to catch that move off of the lows. I did that by watching all kinds of Monster Energy drinks being wheeled out of a Costco store.
Yes, I know. That's just crazy. Yes.
Yeah. Amy, always great to speak to you. Have a great Monday, a great week, and I look forward to speaking to you again soon.
Thank you so much. You too. Take care.
You bet. That was Amy Smith at IBD. This is Steve Rhodes, TFNN. We'll be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filled in for Tom for the evening. And we're going to go out to Martha's Vineyard. We're going to go take a look at golden minerals with our man, Steve. Steve, thanks for calling. Thanks for holding. How you doing today?
Here on Martha's Vineyard.
Yeah, what's it like out there?
Well, today was a little bit cloudy, but we've mostly had a very nice sunny weather, a lot of sailboats. I've been out in my sea kayak doing a little fishing. You know, I've got one of those fishing kayaks, so I like to go out and commune with nature.
Oh, that sounds good. And sounds to me like maybe there's some lobster in your future?
There have been lobsters. in my future pretty recently.
That's great. Now, do you live up there, or do you spend the summers up in Martha's Vineyard?
I spend most of the summer here, and I go back and forth when I'm not working around Boston.
Yeah, well, that's great. You wanted to take a look at ticker symbol is AMUN. Company's name is
AUMN. Yep.
AUMN. Golden Minerals. They are a exploration mining company. I believe they do that in Mexico. So tell me what you're doing, your time frame horizon that you're taking a look at. If you're in the trade, what your parameters were before you got in the trade, and I'll do what I can to assist you.
Okay. Well, I looked at the stock when it was in kind of a bullish little wedge thing when it was down around 50 cents, and it kind of popped out of my wedge before I made the decision to get into it. So it went up pretty high. It went up 150%. So then I went to a weekly chart, and I was looking at a weekly chart, and I'd read a book called from Weinstein on Weinstein base patterns.
Okay.
And this looked like it had a Weinstein base pattern on the weekly chart. So then I started doing a little research on it, and I saw they mothballed their mine, and they were just going to open it again in July, and that news popped it. So I waited for a retracement, and I bought it at $1.
Okay.
And I put a good chunk of money in it because my projection was that, I'm not sure exactly when, but I could see it, given that it was the $28 stock, going back up to $3, $3.50, and that's big money if it does what I think it's going to do.
Yeah, if I take a look at the weekly stock chart on here, the first area, let's assume, I don't want to assume anything. Let's say that it does move higher as you expect. The area that I would be targeting, because you've got a longer-term objective outcome on this, is September of 2012, Steve, and there's a high-volume high that hasn't been tested. And as price moved off of that, now that's at a level of traded up as high as 722. The low there is 560. So that's where I would be kind of targeting if, in fact, it does move the way that you're looking. I never like hearing that somebody's backed up the truck on a $1 stock out there.
Yeah, I know. I don't do it very often. I just I've had luck with this strategy a few times in the past.
Okay. The breakout session, if this does pull back, so I don't know where your stop is or whether you'd consider adding to the position, where this broke out from, as you know, June 17th, and that's really where it could pull back to, which is the 67 cent area, and it would be natural. I don't know if this equity here will pull back as the gold continues lower out there, the metals continue lower, but that's the spot to really look at coming in on this equity. Now, as a suggestion, and we're going to be going out in just a moment to our folks out at TD Ameritrade that do the options hour for us. One thing you could always consider on a stock that's $1 or less is using what I call an unexpired option. And that's taking some percentage of your capital, 1%, 5%, something like that, whatever that might be, and then buying that number of shares and then sticking that in your drawer. Versus, and that way your stop is basically zero out there, and you've kind of minimized your risk because you always want to make sure that you've got capital in this game out here. And anything that's under $1 is always a little bit risky. So that's my suggestion to consider. And of course, you can always do that because you're still in a profit position out here. So does that assist you at all with what?
I just. Some years ago I saw that LNG stock when it was $1, and I did a little research like this one, and I thought I saw something similar, and the damn thing, went up to $60 now. But I sold it around 20, but still 20-1 on your money is.
It's a good thing. It's a good thing.
Yeah. This one kind of feels that way to me. I know
Well, I wish you the best. I wish you the best, and sounds like you'll be eating a little lobster, so enjoy your summer up at Martha's Vineyard. Thanks for holding. We appreciate it very much, and just be careful.
Thanks very much, Steve.
You bet.
And I know you were going to cover gold and silver a little bit, so
I will. We will.
All right.
Thanks so much for calling. Folks, as we do about this time each Monday, we spend time with our folks out at TD Ameritrade, and it's called the Options Hour. It's a great program that's hosted here at TFNN.com. Tomorrow, we've got our host, Chad Coco, who's on the line with us. Chad, how you doing today?
Pretty good. Thanks for having me.
Oh, our pleasure. So tell us what you're looking at. What type of things are you going to cover tomorrow during the show? And, folks, that's from 12 to 1 here at TFNN.com.
Well, I think so. The past couple of weeks we've been doing these shows, we've got into a little bit more complicated type strategies. I think I'm going to bring it back down to the basics, go over some of the basics with options trading, maybe get into some entry-level option spreads, and then see where we can go from there.
Yeah, now, great time for folks to be taking a look at options. The insurance cost here with the VIX index, being at about $11.82. I would think you've got some pretty decent material to work with.
We definitely do. Yeah. So the VIX dropped about 2% today overall. We saw about a % move up at the end of the day today, which is kind of nice for those trying to sell some premium.
Yeah. Now, is there anything specific, any equities, any specific trade on anything that you guys that you've seen that looks of promise for our listeners?
From this morning, I was looking at a couple. This morning, I was looking at some bullish positions in Amazon and Visa specifically.
Okay.
We'll see if we can carry those over tomorrow, see what kind of movement we have with the SPOOs and the pre-market to see if that gives us any indication what's going to happen with the rest of the day.
Yeah. Now, when I take a look at Visa, I looked at this equity this morning, and so now that I pull it back up, it looked like it was taking out a swing point from the trading session of May 30th. That had 1.5 million shares, and today was able to move higher with twice the volume, so about 3 million shares out there. It looks like this wants to run to the 224, maybe 229 level. Was there a target area that you're looking at specifically in Visa?
About 225 is my target on Visa at the moment.
Yeah. No, I think it looks to me like that is where looks to me like it wants to head to that 229 level. So I think 225. So I think folks ought to listen. I think I'm going to listen in to you tomorrow.
Take a listen and take some time out of your day and see what we have going on.
Absolutely. Now, did you also mention Amazon was another equity that you're looking at?
That was another one. I haven't looked at it later in the day, but this morning I was taking a look at that. It looked like we had some good movement in the morning for another big bullish move, which appeared it did throughout the day. It looks right at the aftermarket. There was a little bit of a sell-off on that, but I still feel pretty good on that one as well.
Yeah, now I know that this took off on Friday. This had some big volume behind the move. Gapped up, had about 8.3 million shares. That says that Amazon wants to actually trade up to 379, maybe 395. Do you have a target in mind when you're taking a look at?
Again, I'm being a little bit more cautious. I'm looking about 375, 376 in that one.
Hey, that's I take 375 when I'm throwing out 379. And
right.
Now I guess the move behind that on Friday. I don't know if this is the case or not, but from was their drones? They were going to become the Domino's Pizza of delivering goods, except for pizza, right?
There was some news on that. Yes, I'm not really sure if that really caused the movement, but there's definitely some news popped out on the market related to drones and delivering some of their products via drones.
Yeah, now a 30-minute delivery, I would think that would be pretty big. That could put some, if that ever did come to fruition, that could put some hurt on stocks like UPS, FedEx, I would think.
I would think so, as well as I also think retail stores. If I can get a product delivered to me that it would take me 20 minutes to go to a Best Buy store and wait in line, if I can have it delivered to my house in 30 minutes, something I might be considering about.
Yeah, no. Hey, I think maybe they'll maybe they'll go ahead and start delivering pizzas. Whether it be, they can do the 30 minutes or less. That opens up a whole new avenue.
Sure does.
That they're not in. Well, look, folks, if you haven't had a chance to listen into the Options Hour, it is a fabulous show. We just took a look with Chad at, he gave you a couple equities that he's going to cover tomorrow. I can tell you both those equities have confirmed A to B equals C, the up pattern. So I would suggest that you listen in. That's 12 noon here at TFNN. Chad, as always, thanks so much for all the work that you do here for TFNN, and have a great evening.
Oh, glad to be a part of it. You as well.
Thanks so much. That was Chad Coco. Tune in tomorrow, folks, at 12 noon for the Options Hour. And sure, he's going to cover those two equities. We had the Dow finish up 111 points, the S&P up about 10. We get back. Let's go take a look at gold. We'll take a look at silver. We'll take a look at the metals, see what they're doing, what to be careful of. We'll be right back, folks.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. Thanks so much for joining us this evening. And don't forget, I kick things off for TFNN each morning. I also have a newsletter service called Mastering Probability. You can check that out. If you go to the homepage of TFNN.com, you'll see my name under the radio show host. Click on that. That'll take you to a landing page, and you'll see Mastering Probability. Click on that once more, and you can test drive Mastering Probabilities next 30 days, unconditional money-back guarantee. In the aftermarket out here, we've got Valero. VLO is the ticker symbol. It's off about 3% this evening. It is down about $1.53. It closed out at $49.93. Last trade fired up at $48.40. Folks, if we take a look at the A to B equals CD pattern on this equity here, and this is the daily chart that we're taking a look at. This is exactly how you want an ABC if you're short. This is how you want to see an AB equals CD to the downside, and that's this. Makes a high. This is on the trading session of May 6th. 59.69 is the high out there. Looks like a little shooting star candle as well at the high. That's the opposite of the hammer candle. Makes a move down into a little doji candle. That is on June the 11th. Gets down to a price point of 52.75. Makes a 0.786 retracement. Almost perfectly. Does that on the trading session of June 24th out here. If you recall, we took a look at the composite, which has also made a 0.786 retracement. Not saying the two are the same, but we'll know soon enough. We'll know tomorrow. Now, in the case of Valero, gaps down, big volume. That is called wide price spread and accelerated volume off of a C point. Of course, it makes the 1-to-1 A to B equals CD. That's not the end of it. Then makes the 1-to-1.272. That is not the end of it. As I mentioned in the pre-market or the aftermarket here, trading at $48.40. Where's that going to take it? Well, if you take a look at the most recent swing point low, that's $48.31. That's July 9th. Tomorrow morning, it looks like that will be under pressure and says $46.90 is the next stop for Valero, VLO. And if I pull this back, this is a daily chart. I'm trying to find the next high volume bar out here. Boy, that high volume off of that high on the trading session of June 25th does not look good. If we just take a look at a natural retracement, we're going to look at a swing point out here. That swing point takes us to October of 2009. We're going to go from that low. I'm going to try to go from that low. I'm going to grab it one more time. There we go, from that low to that A point, to that high that was put in on May the 7th. We'll see that very likely price is going to pull back to about the 43 area. That is on ticker symbol VLO. Let's take a look here at gold and silver. If we take a look at gold, the chart that I've got up on my screen here right now, this happens to be the 4-hour chart, so it's a 240-minute chart. Most important element for you to take in here is that gold, which came off the lows. This is back on June the 5th, came off nicely. It formed this little rising price channel. And what it did here today was it broke it with conviction. Coming into the time period here of about 8 o'clock this morning, it looked like maybe that was the area where price was going to hold. That's the bottom of the rising price channel. But no, it had a different idea, and it just went ahead and moved through it with volume on that time frame out here. What does that set up? Look, price has gotten into an oversold condition. The most bearish pattern when you get into an oversold condition is to work yourself sideways, is to work off price by moving sideways. In this case here, even if it doesn't do that and it bounces a little bit, if it can't get back inside the rising price channel, the house of the rising sun out there, well, what that does is that sets up another leg to the downside. I think that is a likely option. And I think that's a likely option because of what the commercial traders have been doing over the course of the last several weeks, ever since the low, quite frankly, that was put in back on June the 5th. Here's a weekly chart that I've got up on my screen. Now, I don't have this updated for the CFTC data. It came out on Friday, but I did peek at it. And when I peeked at it, and the computations I looked at, the net short position for the large commercial traders, considered to be the smart money out there. They take a while to go ahead and build their positions. They're big tankers, if you will. Well, they moved even higher on their net short. So as gold was moving up into Friday, now the CFTC information is only good through Tuesday's trading. That means I don't know what they did on Wednesday, Thursday, or Friday. But since I know that they're big money and they were building a position, I don't think for a second that they were trying to duck out of a position. And instead, they were even selling more up at the highs out there. On the weekly chart for gold, it's going to be important this week here for gold to maintain the trend line. That's really the next area of target. And if you take a look at that trend line, what I'm referring to is the high from October 5th. Inside gold, that's at 1798.10. Your next touch point is going to be that key reversal session, March the 21st. That high is 1392.60. What you'll see is price so far, and this is only Monday, what price did was it stopped right at that trend line that it had broken out of. But it didn't break out with conviction. That's the only problem. Nonetheless, it is back testing that trend line. If it ducks back inside, that sets up two possible outcomes, a minimum of two outcomes. One is moving down to the 1248, 1258 area. The second outcome is moving all the way back down and having a triple bottom filtered test, moving all the way back down to the January level out here. If we take a look at just simply retracement areas, of course, there's some other intermediate side roads, some other intermediate retracement levels. 1280 could be the 0.618 retracement level that price could stop at. Maybe it's 1263. We'll know as we take a look at volume. Here's what we want. We want volume. It accelerated today, but it was less than the breakout session that it most recently had. So that's bullish. I say, if you take a look at these big humps on my screen, these are cycle patterns. They represent about a 13.5-month cycle. And what you'll see out here, if you just take a look at, quite frankly, the last two, meaning the low back in June of 2013, the low back here in January of 2014, and what this is suggesting is right around now that we see another push lower out here, securing a nice big bottom inside the marketplace. So everything is really set up for gold to move lower. Look, what I can't control is what the markets are going to do next. What you can control is where your stops are. So make sure when you're trading, you use a bracketed order. What does that mean? That means that you've got a target to the upside if you're long something, and you know where your stop is at. Make sure that you have that in place. Let the market do its thing. Go ahead and manage the trade, identify both your targets, and then go out and get some lobster. Go out and have some fun. It is summertime. Play a little tennis. Play a little golf. Do whatever it is that you're going to do. But please make sure that you are trading with a bracket on everything, because you can always get back in if you get stopped out, either because you had an exit strategy and it hit your profit target, or because it hit your stop and you want to go ahead and reassess. So, folks, thanks so much for joining me here on the Tom O'Brien Show. Again, I'm your guest host, Steve Rhodes. Filling in, tune in each morning, 9 a.m. on TFNN.com. And I'll look forward to seeing you soon. I hope it's really soon out there. Have a great evening. Take care. And we'll see you.